In today's market update video, we're going to be looking at consolidations. We're going to be looking at what are consolidations, two, why they are so important to understand and to quantify them, and three, we are going to be looking at how we can use them to create robust, consistent strategies using one of the compression analysis tables that we have just done and completed from our research desk. Hi traders, thank you for joining the Master the Markets team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It is Thiru Napan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. Let's dive into the topic for today. Today's topic is going to be on consolidations. So let me just take a look at that. So for example, let's take a look at what are consolidations first of all. Consolidations are just a sideways movement, okay? Sideways movement. You see, if a market is not in consolidation, it is probably trending either as an uptrend or as a downtrend, which one of our other trader coaches in our team has talked to you about in our previous market update videos on different trend variations which we have shared with you. So if the market is not in trend, it must be consolidating. But one thing that I did find in my trading journey and experience is that nobody really quantifies to you what a consolidation is. How do you quantify it? The best way, first, your starting point is to quantify your swing highs and swing lows. Then, if of course it does not take out the last swing high, swing low, then it is in a consolidation, which we have correctly identified as either a variation 2 or a variation 3 setup, okay? Because it gets caught up in a range where it doesn't take out the last major swing low or swing high. That is what we call as a consolidation. So for example, over here on dollar yen over here, as you can see that it goes up, down, but it does not take out the last low or last high, and it gets bottled up in the small tight range over here, and it does take out finally this last low, but it still keeps in that range. The next quantification that we use for consolidation traders is that not only must it not take out the last swing high and swing lows, but in this instance where it does take it out, which is the last swing low, would we say it's come out of a consolidation? That's when we take another parameter into a factor as well, which we have found from our analysis, compression phase analysis, is that in the currency world, if it does not move more than 100 pips, we would still consider it as a consolidation. Okay, so for example, you can see in this top to bottom move, it just moved 62 pips. That is still, I would say, still in a narrow neck consolidation, and therefore I would not consider it as a true breakout yet. So I will still consider it as a true consolidation. So I'm not only using the last previous swing highs and swing lows, but I'm using also a parameter of swing distance move, which is 100 pips, okay, which we have talked a lot about in our open equity data that we collect. That is on the what. So I've defined to you how we identify a consolidation. The second thing, traders, is what we look at is, you might say, okay, this is all very good, Thiru, that you have identified, you've defined it very well and very clearly, but however, why is this important to know? Why should we know about consolidations? One of the reasons why we should know about consolidations, traders, is that the main reason is being robust trading strategies. Now you see, for example, once you've understood the definition of consolidations, it can help you really preserve your profits and not lose them back. Okay, you see, one of the main parts where we as traders lose back money to the markets is that during consolidations. You see, when you want to, let's say, enter on this signal that you want to enter, but it doesn't move much, and then it starts to consolidate. That's when you lose back your profits to the market. Once you've identified a consolidation very well, you would stand back and not take the position and not lose back your profits to the market. Okay, that's one of the main reasons why you have to understand what consolidations are and identify them correctly. Another reason why you want to understand what consolidations really are and what they mean is that traders, you can also design, as I said, robust trading strategies that can help you make some really good, consistent profits that you can benefit from. Because the overall principle is that traders, that once a trade runs out from a consolidation, you would get a big burst run through, and we want to capture that as traders. Okay, that moves us to the next part. Okay, now that we understand why it's important to identify consolidations, because it can help us preserve our profits and not lose it back to the markets. Also, the other thing is that it can also help us design strategies that can capture big runs. The natural next question would be, okay, how can we capture them, Thiru? What are the ways? So you see, traders, so when we look at that, right, when we look at that, let me show you this compression phase analysis that we have taken a look at. Over here, let me just erase that away for you guys. So over here, we can see that I'm looking at the compression phase analysis here, just on only one instrument here. You can do this on other instruments too, but you must quantify your tops and bottoms first. You can see that over here, for total samples for more than one compression, we are looking at 62. Over here, what we have really measured over here is that the trade sample which has got one compression. That means when something is in trend and it does this is one compression, let's say less than 100 pips, right? We've defined it as. Then when is it does it breaks out of it and makes the next more than 100 pips. So the total sample is 29 of them, 29 of the 62. So 62 is total sample. 29 out of the 62 breaks out on the next one to become a more than 100 pips phase. Okay, over here, total samples for more than or equal to 2 compressions. That means it's like this. It compresses for 2 times. This is 1, less than 100 pips. This is 2 for less than 100 pips as well. Okay, so when it does that, then you can then see that 20 of them will break through on the third one to, let's say, more than 100 pips. This is what we mean. So then, of course, the first thing we are looking at is, okay, 46% only probability for it to go more than 100 pips after the first compression, 60% after the second, 61, so more or less they're similar, but you see it shoots up to 80% after the fourth compression. So you can see over here, if it compresses for 4 times, 1, 2, 3, and 4, but the compression must be defined. Over here we have said less than 100 pips, and then after that, the fifth one, usually 80% of the time it will compress. So you can see, but however, if you do 8, then you get 100%. So it really depends on what type of strategy you want to build. Is it more low frequency, very high reliability kind of strategies, and then you design them accordingly based on probability. But you can see that it's very quantitative, very systematic, very methodological as well. Okay, so over here, if you go back to the screens, you can see over here I'm looking at dollar yen over here from the previous ones. You can see here was 1 compression, 2 all less than 100, 3, right, 4, so 0 immediately turned, 5, right, 6, 7, and 8, right, 8 compressions. You can see 1, 2, 3, 4, 5, 6, 7, and 8. After the 8th one, you can see then it started to burst out to more than 100 pips, and it's still over there. Okay, and it's still not turned yet. Look at that, that nicely correlates also with our table over here. After 8 compressions, you see, you could have caught that, and usually it highly probably on a 100% rate moves to more than 100 pips. You can capture that move, and you can make some good money out of that. If you do £1 a pip, that'd be £100. If you do £10 a pip, that's 1,000. If you do £100 a pip, that's 10,000. But you should wait for them, and if you want to increase your frequency, increase in terms of number of instruments that you're trading, you can check this on different instruments like currencies, commodities, indexes, and all that. Okay, good traders. So now I've gone through with you basically what are consolidations, why they're important to know, and how you can capitalize on them as well, showing you your compression phase analysis that we have shown. That's one way of capitalizing on it. Another way that you can capitalize on consolidations is don't take the first breakout, take the second one. If you do need to, take it on the retracement or take the opposite move as well. That's another way you can trade it as well.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
So that's great. So that's on the topic for today. So now let's swiftly move on to the market update, onto the different markets for today. And then let's take a look at the open equities on them and how they're performing. So you can see over here in terms of dollar Swiss at the moment, you can see that this is an uptrend, but it's doing a phase 2 move. I would say more open equity to the downside as of now. In terms of dollar yen, let's take a look. It just came out of a consolidation. Open equity has diminished to the upside. I would still say look for a turning point here to the downside, but if you still want to do ride it, then be more tighter on your stop losses. GBP USD on the other hand, you can see that there is a good strong continuation move, more open equity to the upside. I would definitely say that. Euro dollar on the other hand, I would still say more open equity to the downside because it just confirmed just now. Aussie dollar on the other hand, you can see over here that more open equity to the upside as well. GBP yen on the other hand, you can see that this was the last confirmation. I would say probably more open equity to the downside, but if you do want to ride it to the upside, I would say more tighter on your stops on each bar. Bitcoin on the other hand, going strong at 55,000. For those of you investing in it, still holding on to it, that's very good, well done. In terms of open equity, I would say that it's diminishing, but go tight on your stop losses if you're doing a swing trade move on this. In terms of Brent oil, still going strong, probably the oil shortage that's happening as well. Still going strong, open equity diminishing, so I would say go tighter on your stop losses. Gold, on the other hand, on the daily time frame, more open equity to the upside, I would say. And FTSE indexes, I would say more open equity to the downside, but there might be a turning point to the upside, so be wary of that. Dow Jones on the other hand, more open equity to the upside. S&P similar, more open equity to the upside. Silver, I would say still more open equity to the upside over here as well. And finally wheat, I would say more open equity to the downside with this confirmation, but be aware that it's on an uptrend at the moment. Okay, so that's good. So that's on the market update over here. In terms of our performance for this week, how did we do? Elite Room, we had flat on two strategies, 100 pips, took a little bit of a downside, minus 1.25%. Other than that, it's been flat on all the rest, minus 1.25 overall. Live trading room, very small losses on 70% and 70% on the cash in, and overall minus 0.52. Overall across both rooms minus 1.77. This is what we do. We keep it very small, the losses, until we wait for the big runs. Even though saying that, traders, this year has been a bit tough. I mean, the markets have not been really moving that much. You've not been really getting that big runs, except for the beginning part of the year. So the next other part of the year, then what we do then is preserve onto our profits. That's what's very important. Okay, right, we believe that you got good value out of this, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications bell. This will get the